Hi, I'm Tom Lydon, editor of ETF Trends, here in Boston at the Charles Schwab Impact Conference. And I'm here with Luciano Siracusano, Chief Investment Strategist at WisdomTree. Great seeing you, Luch.
Good to see you, Tom.
There's a lot going on this year, especially in global markets. What did advisors get right and what did they miss?
You know, I think one of the biggest rallies that people missed in 2015 was the rally in international small cap stocks, specifically in Japan and in Europe.
Well, it's tough for the average advisor when you look out there, you're kind of nervous about poor economic numbers, all the monetary policy effects that are going on. How do we weave through all this and make the right decisions?
Well, I think the first point is just to recognize international small cap as an asset class.
Okay.
You know, there has been a small cap premium that's existed over time, and we've seen it in international markets. That's why WisdomTree was the first firm to launch international small caps. But what we saw this year was that the international small caps beat EFA, Japanese small caps beat the Japanese large caps, European small caps beat European large caps, and by the way, they also beat the S&P 500 and the Russell 2000 and most of the major asset classes around the world.
And nobody's talking about it.
No one is talking about it. It's very interesting because to me it's signaling there might be an anticipation of a profit recovery coming both in Europe and in Japan. A lot of times the small cap companies are more sensitive to inflections in the economy, and that's one of the things that might be going on.
So the big question is, have we missed it? Or is there potentially more to come because nobody has been talking about it?
Well, it's been going on not just in 2015, but you go back the last 3, 5, even over the better part of the decade. These small caps have been performing very well to the large caps. We think they make sense as part of a global asset allocation for diversification benefits and just for completion. You don't get the small cap exposure if you only own EFA or if you only own the large cap international managers. They typically don't go down to that size segment of the market. And as we know from smart beta, size matters. And when you're talking about small companies over time, we think there's a premium that can be harnessed.
And you not only are buying a diversified small cap index, you're creating through your smart beta strategy, hopefully picking the right spots.
Well, with WisdomTree, what we're trying to do is give you very broad exposure to basically all the Japanese small caps that pay dividends, and then we wait once a year by dividends.
Right.
In Europe, similar strategy, very broad-based strategy, but only dividend payers wait by dividends. And these two strategies I talked about this year have both been unhedged, which is interesting because they've been able to do it in an environment, particularly Europe, where the euro is depreciating. And one of the points I would make there is we have a good-sized portion allocation to the UK. And that's one of the international currencies this year that's done very well against the dollar.
Right, great point. So, message is, as advisors, as you're looking for 2016 allocation, pick your spots because there actually are some areas that are doing quite well, even while others might be challenged.
Yeah, I say valuations matter, earnings expectations matter, currency exposure matters, and what's going on in those local economies matter. And I think from this point, you look around the world, there's something interesting going on in the Japanese and the European small caps.
Well, you folks continue to bring out great tools for advisors, so thank you and best of luck. Great seeing you.
Good seeing you again, Tom.
Thanks.